For provision for depreciation account, all we need to do to deal with here is provision for depreciation account and disposal account. Why are we talking about disposal account here? Here they said on 1/7/26 sold for 12,000 a vehicle which had cost 50,000, on which depreciation has been charged 30,000. So we're going to talk about disposal account and depreciation account.
I want my card.
Boy, I've had enough of you.
I want my card.
I've had enough of you. It's not going to be so funny. What I could do. I'm talking here now. You stand up when I'm talking. I'm not joking with you. I'm not. And your story ends now. Your story ends now. Don't be the scapegoat. Don't be. Don't be.
Not scapegoat.
You can go home to ask. Don't be. So, he said the balance in the provision for depreciation account was 45,000 euros. So our credit balance, for depreciation you credit depreciation account. So our credit balance is 45,000 on 1/1/2025. So 1/1/25. Balance brought down 45,000 euros. That's for depreciation. Then they said the total depreciation for the year ended 31/12/25 was 25,000. So the total depreciation for the year end from 1/1 to 31/12/25 is 25,000. So that means additional depreciation. So we have our depreciation figure to be 45,000 plus 25,000. So the depreciation figure is how much? 70,000. Do we get that or not, please?
Yes.
So we have 31/12. 31/12/25. Do you get that, please? For how much is that? The depreciation, remember depreciation is part of our profit and loss account as an expenses. It's an expenses. Do we know that, please? Depreciation is an expenses and it is in your statement of profit or loss account. So the additional depreciation will be charged as an expenses to the profit of the business. So here is going to be profit and loss account. Profit and loss account for 25,000. So our depreciation value is now 70,000. Do we get that, please? Do you get it or not, please?
Yes.
So 31/12/25. 31/12/25. Balance CD 70,000 for depreciation. Do you get that? Any question up to now? Any question up to now?
No.
So, there's disposal. They said, sold 12,000 a vehicle which had cost 50,000 and on which depreciation had been charged of 30,000. So we sold the vehicle for 12,000. The cost of the vehicle we sold was 50,000. The depreciation charge was 30,000. So we add this to our depreciation. So that's for the disposal account. So here we're going to have our disposal account. On which day? 1/7/26. Disposal account. How much is that? 30,000 for depreciation on that vehicle. We're disposing the vehicle. The vehicle is cost 50,000. We are disposing it for 12,000. The depreciation charge on this vehicle is 30,000. So disposal account will have 30,000 for the depreciation of that disposal vehicle. Do we get that, please? Yes? Yeah, sure. So, now look at the last thing here. They said Provide for depreciation at the rate of 10% of the value. What is the value of our assets now? The value of our assets is 310,000. So we are making provision for this, which is what? 310,000 multiplied by 10 over 100. 0, 0, 0, 0. That's 31,000. Do you get that? So that's for 31, 12, 26. 31, 12, 26. Here we have 1, 26. Balance brought down. 70,000. Then 31, 12, 26. 31, 12, 26, which is the profit and loss account now, which is 31,000. Our profit and loss account, 31,000. So this is the total value of depreciation, which is 0, 0, 0, 1, and 1,000. Do you get that, please? Do you get it or not, please? So 1 and 1,000 minus this will give us our balance carry down.
So just add the
For provision for depreciation account, the figure we have for depreciation will be for profit and loss account, because depreciation is an expenses in the profit and loss account. So here, the first one is, they said the balance in the provision for depreciation account was 45,000. This is our provision for depreciation account. Our balance brought down from the previous year, which is 24, to 25 is 45,000. Now, they said purchase new vehicle. The total depreciation for the year ended 31. This is the beginning, 1/1/25. At the end of 31/12/25, the profit and loss account will have 25,000. That is the additional depreciation value. That's how we got our 70,000. So depreciation is done from 31/12 to 31/12 is done. Do you get that? Now, in 26, the value is 70,000. The balance carried down here, this the 70,000 becomes the value of our depreciation until 2025. Before the 30,000 depreciation again. This is 26. 25 depreciation is done. The value for depreciation for 2025 is 70,000. Now in 2026, 1726, we have a value of 30,000, and there's a provision for depreciation of 10% from our assets, the value of the new asset. The value of the new asset is 310,000. So 10% of 310,000 will be added to our profit or loss account. Yes?
Do we have to do the one on the...
No, I'm just using this for my own workings. You don't have to do this. So, why do we have this depreciation? Because we disposed an asset. The asset we disposed, the depreciation charge on that asset is 30,000. So that's the 30,000 here. Other depreciation will be on the credit side because we are opening depreciation account. So 70,000 is the balance carried down for the old 2025 depreciation. So the depreciation value for 25, depreciation value for 2025 is 70,000. Now there's 10% for 31/12/26. At the end of 2026, depreciation will be charged as 10% of the